Hello, everyone. My name is Sean Whittington, and I am the Chief Underwriter and Agent Advocate at Argenter& Company. Thank you for joining us for a much anticipated presentation with Nationwide. We're joined by Charlene Werther, the RVP of Brokerage Life Sales, and Kathy Darren, the Director of Strategic Underwriting Relationships at Nationwide. Today, we're going to discuss their current underwriting strategies as well as their underwriting process for life and long-term care products. Before I turn it over, I want to mention that if you have any questions throughout the presentation, you can type them into the chat box on your screen. All questions will be answered at the end of our presentation. Kathy, no one came here to listen to me talk, so I'm going to hand it over to you.
Well, thank you so much, Sean, and welcome everyone, and good morning. And we have a wonderful webinar planned to learn about nationwide underwriting as well as long-term care underwriting. It's my slide here. There we go. I'm going to pause briefly here on our compliance slide. So our agenda today, we're going to talk about our underwriting evolution. So 2023 is not a typo. I want to go through that underwriting strategy and how it got Nationwide to where we are today with our underwriting evolution. And then we're going to talk about our process niche. So everybody has underwriting niches, but Nationwide's process niche is our transparent, intelligent underwriting process. And then a very popular topic are underwriting strengths. And we're including in the underwriting strengths our long-term care underwriting and the unique considerations that go into it. So let's talk about what happened last year. So we began to receive much feedback about our underwriting. It was not competitive. You were not going out with best offer, first offer, and you had too many requirements. So this got all the way up, of course, to leadership, and all of us worked together, including with sales, to develop our 2023 underwriting strategy. So it began with working on offer competitiveness. So we have made a concentrated effort to go out with best offer, first offer. So this really resulted in a change of culture for our underwriters. We empowered them to use critical thinking and the art of underwriting. So any underwriter can be a by the book Brad, right? And then just do whatever the underwriting manual says. That separates a so-so underwriter. And then you have your great underwriter who uses that art of underwriting and critical thinking, always going out with the best offer possible. And that began our underwriting evolution. And we'll go into more detail on the next slide. The next piece was relationships. In the digital age of underwriting, relationships have become even more important. So TMA now has a dedicated team of underwriters at Nationwide. We'll go into more detail in just a second. And then case management. I always say case managers are the most important part because they touch a case first, setting the tone, and then they're the last person to touch a case when it goes in force. And so the dedicated case management team, that is designed by wholesaler. So you have a dedicated team there. And then service. So we're through that Washington CARES Act where we got so many applications, and we really made a laser focused effort to stay within our published SLAs, so our service level agreements. So right now for underwriting and new business, we are running 24 to 48 hours. That ranges from submit all the way to underwriter review, case manager review, as well as approval and issue. Now on our Care Matters side of the house, we're at 5 days turnaround time for underwriting once the interview is completed to an underwriting decision. And speaking of Care Matters, very briefly, we hired Alan Gregoire from Mutual of Omaha, and he came over. And so he is responsible for building out a Care Matters underwriting team. So he has 5 underwriters under him, and he's also helping us to change some of our guidelines around our long-term care underwriting. So more to come on that. And then we have a placement coordinator team. So 2 dedicated people, and they will work with the case managers and for those issued not enforce cases to get them over the finish line. So what have we done to change our underwriting? Well, it started back in February of last year, and we made over 60 changes to our underwriting guideline. The most important decision we made is not following the Swiss Re manual for medical impairment. So we switched to a new underwriting manual, and that's the Ascent manual from Hanover Reinsurance. The reason for Swiss Re is going away from them. They hired a lot of European doctors, and they have everything based on the European mortality studies instead of US. And what we found out, what was keeping us from not being competitive, is we had too many proprietary underwriting guidelines, like for pulmonary nodules, thyroid nodules, that NT-proBNP. So we were not competitive. And those were set by our medical directors. Sometimes medical directors, if they see something in medical records, what do? They go to worst case scenario, right? That's not always the case. So there's less reliance on our medical directors for where we're going from an underwriting standpoint. And then for non-medical conditions like aviation, avocation, we follow the Swiss Re manual. No change there. They're actually more competitive. And then our long-term care writer, so we have a proprietary underwriting manual. And so now we are on our journey to look at the different impairments for morbidity underwriting and start being more competitive in this space. So the biggest announcement, though, is around our internal retention. It is now $10 million for permanent products. For term, our retention is $2.5 million. But for permanent, up to $10 million, table C and better, ages 70 and younger. Our auto bind is $50 million, so that means we auto bind our reinsurers without having to send the case over to them. Jumbo is $65 million. That means anything in force and applied for at $65 million or over, that has to be sent out facultatively. So physically sending the file out to the reinsurers for an offer. So before, our culture was, well, I got a $20 million case. I know our auto bind is $50 million, but now I have to make sure the reinsurers are okay with that. We're not doing that anymore. We're just saying we're auto binding our reinsurers. Our chief underwriter, Lee Fluharty, used to work at Swiss Re, and he has told the underwriters, I will back you in any audit as long as the file is documented. So again, we cannot shout it loud enough. Retention is 10 million. So here is TMA's dedicated underwriting team. So Bill Fleming, he would be your concierge underwriter in terms of the $10 million and up face amount cases. That really is a specialty. And then Karen Tischer, she's been with us a long time. Jackie Messer is newer to Nationwide, and then Deb Cosmar. So the interesting thing is we have a lot of tenure on our underwriting team at Nationwide. And you always want someone who's very experienced, right? And who really understands that customer experience. And the other thing that is good about Nationwide is all of your underwriters are fully accessible. Email them, call them. You don't have to go through a call center. You do not have to go through a case manager. You can contact them directly at any time. So I thought I would throw in this really fun slide back from the 90s. So this was an actual age and face amount requirement chart. Now, the interesting thing is, I think in the future, these age and face amount requirement charts are going to go away because, and we're going to talk about this in just a second, it's becoming about individualized underwriting because of one's digital footprint out there. But take a look at some of this. So let's say you have a client who is 61 years old and they only want 2.5 million of coverage. Look at everything that they have to do. They have to do a full medical exam. They have to do blood and urine. Then they have to get on a treadmill for a stress test. And I can tell you, the medical directors did not like interpreting them because we never knew if somebody had symptoms while they were on a stress test. So that was very interesting. And then chest x-rays. So Believe it or not, it used to be over 10 million. You had to have a chest x-ray back in the day when I actually started in 1995. And in what we were looking for was lung cancer. And now we have the CT scans of the chest to look for that. But it's amazing how invasive underwriting requirements were back in the 90s. So let's fast forward to today. So at Nationwide, we are using what's called a client's digital footprint to underwrite. So it starts with the MIB, the Medical Information Bureau. So the MIB codes, that was actually the first digital tool that came out. So I have to tell you some misnomers about MIB codes. Number one, we do not know from an MIB code if someone was previously declined. And then number two, we don't know if someone was rated. So we look at MIB codes, as a protective value for fraud. So let's say, for example, I apply to Nationwide and I do not admit that I have hepatitis C. And that's found out through medical records that I do, then Nationwide's going to code that hepatitis C. So if I try to get insurance coverage from another carrier, they're going to catch that upon underwriting if I don't admit it. And then you have the motor vehicle report. So that has protective value in the younger ages. So that's where the motor vehicle accidents occur. And then the pharmacy database check, that came on the scene around 2000. Now that gives us 7 years of prescriptions that have been filled. So not prescriptions that have been written by a doctor, but those that have actually been filled. So it's good for us in underwriting because we can see if someone is compliant with their medication. That becomes very important with diabetes, as well as any statins or blood pressure medications. It also gives us the doctor's name too. So remember in the past, it could be easy to clean sheet an application. Nowadays, we always tell people you cannot clean sheet applications anymore. We will find it with these digital tools that we have. And then the digital interview. So this is through accelerated underwriting processes. And this is where the client on their own can fill out on their laptop the Part B medical questions. And we'll talk about more about what Nationwide does around that. Interesting factoid, most of our digital interviews, we have about 90% adoption. They are completed between 10 p.m. and 1 a.m. So we're meeting the clients where they are. And then we have LexisNexis Risk Classifier. So if you have an automobile insurance policy, LexisNexis has data on you. And what it is more of a lifestyle score. It ranges from 1 to 997, and it has public records attributes. So it will have if you had any bankruptcies or liens. It has credit history attributes. So it'll tell your, not your credit score, but any, if you've moved around a lot too, it'll tell us that. And also the motor vehicle attributes too. Now, if you have a professional license like a CPA or medical license, that will raise your score. The interesting thing with LexisNexis when it first came on the scene, if let's say I was 25 years old, I had no credit history, I would get a low score because there wasn't anything in there. So luckily they modified their predictive model because there's no reason to deny somebody that's 25 for life insurance if they're healthy. And then the risk model score. So this is what carriers have. We have our nationwide predictive analytic model that tells us if a case can be accelerated or not. And then electronic medical records, I do have a bias with this. They're not ready for prime time yet. We do use human API in another distribution. We don't have any electronic medical records in the BGA distribution. And again, they just don't give us the information that we need to make an informed decision. So instead, we have pivoted to lab picture and Milliman. But before that, we do, thank God, the electronic inspection report. So gone are the days when we'd have to call up the client and spend an hour on the phone going through the medical questions again, going through the non-medical questions, and maybe doing a cognitive screening, right? Now we can gather all this with electronic reports. And so now what we're using in place of, as long as it meets acceleration requirements, we can use lab picture and Milliman IRIX. And those are great tools that we can use in place of medical records ordering and also in place of an exam and insurance lab. So this is why, we've been able to make upwards of 70% of underwriting decisions fluidless, right? And so just using the digital data that we have here. So I wanted to go into more detail on lab picture. So let me set the scene for you. It is April 2020. We are now beginning to see COVID, right, enter the US. So how are we as underwriters going to continue underwriting cases when we cannot get medical records because doctors' offices are closing down? And we also cannot get clients to get labs done and exams done because they don't want examiners in their homes. I mean, we heard stories where examiners would meet in the driveway, meet outside on the patio. That was really good back at the time, right? But we needed to find another way to underwrite cases. So Lab Picture comes on the scene. They were a lifesaver for us. And here's an actual sample report. So I want to set up this case scenario for you. You have an application, the client is diabetic and has hyperlipidemia. Now let's talk about the old underwriting. So remember that 1990s requirements chart. We have to have medical records because I got to know if their diabetes has any complications like neuropathy or retinopathy with the eyes or any kidney issues. And I got to make sure they don't have anything else wrong with them. And then I have to have the insurance lab because they have hyperlipidemia, so I got to get a current lipid panel. I have to know their cholesterol. And I definitely, because they're diabetic, I have to have their hemoglobin A1C because that gives me a videotape of their blood glucose readings over the past 6 weeks. I have to have a urine sample because I have to check for glucose in the urine, and I definitely have to check for protein in the urine. So you see, this old way of underwriting is underwriting for what I want to know, not for what I need to know. We're changing that culture, underwrite for what you need to know, not for what you want to know. So for this diabetic with hyperlipidemia, I get this report. I have everything I need to make an informed decision. Now, why do I say that? Underwriting is putting together a jigsaw puzzle. When I put that jigsaw puzzle together, I have with Lab Picture 7 years of lab results. So you cannot see this on this screen, but this person had A1Cs in the sixes all throughout. So that's really, really good control. And I have a current lipid panel. I got 7 years of lab results. Why do I need to chase after Ghost and get a current lab? And then also I have the diagnoses codes, right? So I know that this person probably had bariatric surgery done, right? So they probably were diagnosed with type 2 diabetes because of obesity. And then also, but I'm not seeing any neuropathy, retinopathy, any kidney issues. Now, the other piece of the puzzle, I'm looking at the pharmacy database checks. So I'm seeing they're not on any medication at all for neuropathy. They're on no medication for their kidneys. So I'm going to assume no complications. So we were actually able to go out with an underwriting decision on this case without medical records, insurance labs, and exams. So what I like to say is the future of underwriting is actually happening now. So let's switch over and talk about our process niche of intelligent underwriting. We opened it up to all ages and all face amounts. So you may say, well, Kathy, I've got a case that is $6 million. I know that that case isn't going to accelerate. So why should I use intelligent underwriting? Well, you're only responsible for filling out part A of the application. It's much easier on you, right? And the client, they can participate right in the underwriting process by going through that digital or a telephone interview. So they don't have to go through a full paramedical exam. So it's a huge time saver for the client. Now, they will need to do a quick check, which is build blood pressure and pulse, as well as their insurance labs. But based upon what we get in the digital interview, we may not need to order an APS, maybe let's say from the dermatologist. So that could lessen the amount of medical records that we order. So our acceleration rates, ages 18 to 50, one of the highest in the industry at 5 million. Ages 51 to 60 up to 1 million. And it's for standard or better cases. So it's open for all US citizens, permanent residents with that 10-year green card, as well as those with acceptable visas. So it's interesting when the accelerated underwriting processes came on the scene. Let's see, ours was in 2015. There was a lot of promotion of use our acceleration process, you'll get accelerated. And that was to promote adoption. I don't think that was right to do that because you never want to overpromise to clients. So what we say is don't overpromise, right? It's the process that you're selling. And if someone is accelerated, it's a happy surprise. And so our intelligent underwriting process, it's not available on SUL or for Care Matters. Care Matters has its own very easy underwriting process, and then it's not available in the state of New York. For those of you familiar with the state of New York, state of New York does not like electronic signatures or digital interviews, so they have been quite a challenge. They sent us back a 300-page report of questions and comments on our intelligent underwriting process. So here's just a very quick process graphic. So we use iGo iPipeline. So you submit the application through there, but instead of going to Nationwide, it goes right through to Jetter, and the case managers there, they will be able to enter that application into their system and then push it on through to Nationwide because we like to see that cover letter so we know who to communicate with. So once it's received at Nationwide, it's set up instantly, and then the client completes either the telephone interview or the digital interview. Now, with the digital interview, what we do is behind the scenes, as the client's completing it, we run the MIB, the motor vehicle report, and the pharmacy database check. So if we find something that maybe they have forgotten to capture, then we will ask them. And we also have drop-down boxes too. So for asthma, sleep apnea, diabetes, we're going to ask all the detailed questions because then we're not having to go back to the case manager to go back to you, because this is a huge a time saver if we can get everything up front and we don't have to do the back and forth questions and answers. So once this is completed, we run our nationwide predictive model, LexisNexis risk classifier, and if it passes, meaning auto accelerates, it's issued within 24 to 48 hours. But let's say it does not accelerate. That's not a bad thing because that is when we do something a bit different at Nationwide. So our underwriters are empowered to push a case on through to acceleration using Lab Picture and Milliman IRIX. Milliman IRIX, that's the newest tool that uses medical claims data from doctors' offices. We're using this in some cases instead of medical records. So we're going to look at the Lab Picture Milliman IRIX. If it has everything, we're going to accelerate those cases on through. And I have metrics to show you in just a second in regards to that. Also, let's say that the acceleration, it says standard. Our underwriter looks at the case and they say, I don't understand why the model is saying standard. I'm seeing this case at prefer to prefer plus. Do you know our nationwide underwriters can override that model and push that case on through? Now, if a case does have to go through full underwriting, we may order the quick check exam and the lab, and we may order APSs. But even if it goes through full underwriting, it can still qualify for our underwriting programs with the goal best offer possible going out the door. Now, here's some metrics I wanted to share with you for intelligent underwriting. Decision time service, we're now down to 8 days from submission to approval, and a lot of that is whenever the client completes the interview. And the online interview takes about 15 minutes. Adoption rate, I could tell you before COVID, our adoption rate was 7%. Now look at it, 83.3%. The acceleration rates, these are not typos. Ages 18 to 40, accelerating, meaning no labs, no exam, no medical records. 70% ages 18 to 40. And then ages 41 to 60, 50%. So we have what's called behind the scenes a sprint program going on. So anything within that up to age 50, up to $1 million, we're really trying to just accelerate as many of those as possible. And our e-delivery adoption rate, that's up to 39.6%. We do use DocuSign. You're kept informed every step of the way. And placement rate, 86% when cases are accelerated, because there's a quick turn, right? So it leaves little room for buyer's remorse. Now, if a case goes through intelligent underwriting and does not accelerate, let's say we got to do full underwriting, we only order medical records on 21.6% of those cases. Let's face it, APSs, they take a long time to get. They're very, very costly anymore. And back in the old days of underwriting, when we got in paper APSs, doctors really spent a lot of time with their patients and really did a good job capturing notes. Nowadays, they're using these fillable forms. I mean, you go into the doctor's office and while they're talking to you, they're typing away on their laptop. And they're under the gun too, right, with getting through their schedule of patients for the day. So they're just typing away, and we're not getting the information that we used to. So we're going to talk a little bit about field underwriting and why it's more important too in our digital age. So what we said was, we know that it's the digital experience of accelerated underwriting. But I was attending an industry underwriting meeting last year, and the feedback that we received was, in this age of digital tools, underwriting is becoming less transparent. So this is something, we really took to heart, is it's using digital tools but with a human touch. So we're very transparent about the process. Again, we give that choice of a digital or tele interview, running everything behind the scenes. And then you can order the quick check exam and lab through your vendor of choice if it is required. We also don't have any random holdouts, meaning if a case is set up to accelerate, oh my gosh, we have to pull it back to test our model to make sure it's correct. We've never done that. The most important thing that we do if a case does not accelerate, we communicate why. So just some advice, if you're dealing with other carriers and they say, well, we can't tell you why a case didn't accelerate. I don't know about that, because we do get that information, through our pharmacy database check, LexisNexis. We can pretty much tell, right? And that is so important to communicate to you so you can communicate it to the client. And again, we can override the model score and push that case on through. So I'll give you a great example of pushing a case. So let's say somebody's on Adderall and they're 33 years old, they have attention deficit disorder. Nobody dies of ADD. It's not a mortality risk. And so that case, we don't need to order APSs. What are we going to find on the labs, right? We can push that case on through to acceleration. And we also have the ability to accelerate the long-term care writer. So what happens there, the underwriter is reviewing the long-term care supplement form that you fill out. And then we also have drop-down questions too on the digital or tele interview. So we're getting the details on the glaucoma, on the chronic back pain, on the neck pain. And then again, using the digital tools, lab picture and Milliman for that fluidless experience. So you're going to see more carriers starting to use that Milliman IRIX. It really has been a great solution to use in place of medical records, within those acceleration parameters there. And I wanted to provide a success story using our intelligent underwriting process. So here's someone who is applying for 10-year terms. So this is a real case, and they're looking for a preferred plus. So as an underwriter, when you submit an application to Nationwide, the first thing I look for, the producer certificate. What did you sell? I look at that illustration. What did you sell? What's the premium stream, right? Do I have any net amount at risk because it's a single premium or 1035 exchange? So this was actually on the agent himself. And so we wanted to provide a really good experience. So the digital interview was done. So he's 6'4", 255 pounds. So that falls into preferred on our chart. So, but he's looking for preferred plus. Well, now he's got hypertension diagnosed in 2018. He says control with medication. He last saw his doctor in December 2023. So we know he's got good follow-up, right? Hyperlipidemia, he's on a statin, so that's good. And then plaque psoriasis, and he had topical cream treatment in 2016. No big deal there. So, but let's look at this. He's 57 years old, right? So it does not meet our parameters of acceleration because it's only up to 1 million between the ages of 51 to 60. But prior to our underwriting evolution, I'm underwriting for what I want to know. And oh my gosh, I have to have that quick check exam, the insurance labs, and then I'd say an APS, right? All right, so let's fast forward to our underwriting evolution. Our underwriter used critical thinking and the art of underwriting and approved the case the next day as applied for a preferred plus non-tobacco without any further requirements. Now, how did he do this? So remember that lab picture report. So he had 7 years of lab results, which included a lipid panel that was done December 21st, right? So why do I need to go out and look at his lipids again? I have current ones. And they also use the Milliman IRIX, in place of those traditional medical records. So he was able to go out best offer, first offer, even though the build was 17 pounds off of the preferred plus build chart, right? 17 pounds, right? And we trusted the client, right? And we said, we're going out, preferred plus non-tobacco out of the gate. So that policy was placed in force by January 25th. And we had actually received that, yes, in late January. So this was a very quick turn on this case. But this is a great example of how digital tools with the human touch, you can still go out with the best offer possible for the client. All right. So I never thought during COVID I would miss talking about marijuana. So marijuana was always the number one topic before COVID. And now we're back to talking about marijuana. So it's interesting. We're seeing a lot more people admit to it, whereas before in the old days, nobody would admit to it, right? So nationwide, we've come a long way with this. We are now non-tobacco across the board. So Preferred Plus is available if you use 2 times per week or less. Now, if you use between 3 and 6 times a week, you are standard non-tobacco. Daily use, so we do see people using gummies every night to sleep. Honestly, we'd rather have you use gummies than drink alcohol, right? It's alcohol has more of an effect on the body than the marijuana. So daily use, table B, non-tobacco, ages 21 and older. Now, if you vape marijuana, that's still going to be at tobacco rates, and it's because in order to price for certain impairments, we use a lot of research studies, and we don't have that tincture of time with vaping because it's fairly new. Now we know the effects of cigarette smoking, right? But vaping is too new to really tell how that will affect people for years to come. So we do not test for marijuana on our insurance lab. So believe it or not, interesting thing about marijuana, it's absorbed by your fat cells. And so where alcohol is absorbed in the blood, marijuana is absorbed in your fat cells. So it is really based on your metabolism. So I can smoke marijuana today and test negative 2 weeks from now. Somebody else can smoke it today and test negative 2 weeks from now. So it really muddies the water as to how often somebody uses it. So we just got rid of that back in 2017. Also, little fun fact that we do here. So everybody's heard of the munchies when using marijuana. And so what we do, if you're overweight, we'll just use half the debits for your build along with the marijuana rating, which at worst is table B. So we want to switch gears now and talk about our living benefit riders. So we do have a chronic illness rider. And so these riders are available, the chronic illness and critical illness, if the long-term care rider is declined or not applied for. And so chronic illness automatically included up to table C or $5 flat extra. And it's for ages 18 to 65 on permanent products except survivorship, and ages 18 to 55 on term except 10-year term. And then we have the critical illness rider. So this is for cancer, heart attack, kidney failure, major organ transplant, strokes. So automatically included, standard or better risk with no flat extras on specific products. And then ages 18 to 65 for perm except survivorship, and ages 18 to 55 for term except 10-year. And then we have the terminal illness rider. So that kicks in with a life expectancy of 12 months or less. That's automatically included in all policies except for survivorship. Now, the interesting thing about terminal illness is when someone goes on claim for cancer, and talking with our manager of our long-term care claims team, he told me that most people opt for the terminal illness rider rather than going on long-term care claim for cancer, especially if they have been diagnosed with stage 4 cancer. So here are our basic underwriting guidelines as we're switching to now our long-term care rider. So in the past, oh my God, we muddied the water so much for all of you because we went up to table E as in Edward. So it was really hard to explain why somebody could be preferred on the life and then table E on the long-term care rider. So now we switch to preferred, which would be preferred and standard risk. Standard rate class, we banded together table B as in boy to table E as in Edward. So it's much easier to sell the long-term care rider. You're either preferred or standard. And we also provide a couples discount. The reason for that is if you are married or in a committed relationship, you are less likely to go out on claim. You'll go later out on claim than someone who's single living alone. Now, it does not have to equal the face amount of the life coverage. The one thing we want to announce here is our long-term care rider is now available up to 2 million now. So it went from 1,500,000 to 2 million. And medical requirements, do they differ? No. Now, what if somebody's over the age of 65? Then it does require a relationship with a primary care doctor for the past 2 years. And then, did you know our long-term care rider can be added after policy issue? So after the first policy anniversary. So let me set this up for you. So you have a client that fills out an application, and then we find out that they just had, let's say, surgery for their shoulder, and they're going through physical therapy. Well, they're not going to qualify for the long-term care rider because they can't lift their arm above their head, so they can't do 2 of the ADLs, dressing and showering, and they're still going through physical therapy. So what we would do is we would say, okay, we'll issue the life now, and then you can apply once they're released, once they're fully capable of doing all of their ADLs again, then you can reapply for the long-term care rider. And then you can look at the block of business that you have written through Nationwide, even if it was 5 years ago. You can go ahead and apply for the long-term care rider. Just had a question yesterday of a client that it was issued, well, gosh, it was back in 2020. And so he's going to apply for the long-term care rider on his existing Nationwide policy. So many times we get asked, why is the long-term care rider rated or declined? Why is it underwritten differently than mortality? Well, these are the unique considerations that we look at. Cognitive impairment. As you know, you can go out on claim, right, with any cognitive impairment. And if there's anything in the medical records where somebody is forgetting names, they're leaving food on the stove, then we will need a thorough neuropsych workup, right? And I have a great story about this. So we had a case that came in. She was a school teacher and she was having some issues. and very odd behavior because she was a school teacher. She was actually taking food off of school children's trays at lunchtime and eating it. But when she went to the doctor, her family went with her. They talked about her forgetfulness, her strange behavior. They did all of the physical testing, the MRI, the CT scan, the neuropsych testing, and she was normal. Okay, so we went ahead and issued it. Do you know, 4 months after we issued the case, she actually was diagnosed with dementia. And of course, the long-term care writer, kicked in there. So that was a fascinating case where, that day she did well on the neuropsych test. All of her objective testing was fine, but it was the behavior that should have been the clue, right? So that's why we are very careful about cognitive impairment and any symptoms. A functional capacity, ability to perform activities of daily living, mobility. So not so much an issue, right, with mortality underwriting, but I can tell you with osteoporosis, we look for falls and fractures. So anybody, so if a client has fallen, what we want to know is what happened with the fall, because we may not get that story in the medical records. So field underwriting, right? So what a different perspective, right? If somebody falls on the ice in February versus I fall in my kitchen where it was level, right? So that's going to present more of a concern than falling on the ice. So, and then if somebody is having fractures because their bones are so brittle, and then the use of multiple medications. So when we see 10 or more medications being used, that becomes a concern too because of the interactions and an accident risk. Frailty, this is now an actual diagnosis that doctors can put on medical records. So this is important in the older ages. We talk about older people getting what we call the dwindles, where they're kind of fading. And your body, each body system has so much reserve, your lungs, your heart. And it's been fascinating over the years of underwriting to see, people kind of fading away. So we look for people that are losing weight because of either undiagnosed cancer or because of depression and they don't feel like cooking, right? So those are big clues there. So anything you can do from a field underwriting perspective on how active they are, outside the doctor's office, gardening, driving, taking care of their grandchildren, that paints a great picture for the underwriter. And then the comorbid. So overweight and arthritis, each condition aggravates the other, right? So with that, somebody becomes overweight, eventually developing arthritis that may lead to joint replacements. So that's going to become more of a consideration for long-term care. So for mortality underwriting, we look for loss of life, right? So all I want to know is the proposed insured at risk of dying earlier than average life expectancy? So we have joked, us underwriters have been around for such a long time, we're bookies, right? We're betting on how long a person is going to live. And we don't have a crystal ball, right? We just go by our underwriting manuals and you learn to trust your instincts too. So we always talk about why is this person applying at this point in their lives for life insurance? And then morbidity underwriting. So I'm evaluating for loss of function. So what is the risk, right, that a person will live with a debilitating condition that can impact their ability to function independently? So someone with multiple sclerosis, with rheumatoid arthritis, right? Those would be examples where you can live a normal life, right, but be debilitated. So again, that one morbidity, you start with obesity, you go into diabetes. Now you develop the complication of neuropathy, numbness and tingling in your hands and in your feet, and that could lead to falls, which could lead to fractures. And we're also looking at the future too, right? Just like we look at the future of mortality, we look at, how they are functioning at this time, as well as how they could be functioning in the future. And then we also look at quality of recovery from an impairment. This is paramount for any joint replacement. So we look to see, have they completed their physical therapy? If you complete your physical therapy with joint replacements, we found with our claims underwriting that you have a much more successful rate from recovering from the knee replacement and better enjoyment too. And also proper control, right, and level of stability, all important factors. So you're really underwriting a person's medical care too. So I had mentioned earlier on in the presentation that we are looking at our proprietary long-term care underwriting manual. And you're actually the first group to see this because we looked at anxiety. We're going to spend most of the year looking at all of this. So this is the first condition to be updated. And you think about, anxiety, what qualifies as preferred couple? There you go, situational, no medical treatment, mild symptoms. There could be an ER visit, right? Couple single, you're stable on medications. It's okay if you're going through outpatient therapy. We're fine with that. Outpatient day treatment programs, and there could be an ER visit too, and you're currently stable. So one of the things I will say, it's very hard to go out on claim with anxiety and depression because I can't say, I don't feel like getting out of bed this morning. That's not going to qualify for a claim. You have to be physically unable to get out of bed for a claim. So usually anxiety and depression, what are we most concerned about? A suicide attempt that is unsuccessful. So where they are, maybe permanently paralyzed or something else, from the suicide attempt. So osteoporosis, we see that a lot. So with osteoporosis, build is a big factor. So if I see a female who's 5'98" I'm really going to look for falls and fractures. And I'll give you an example. I had a case years ago. She was 5'98", 62 years old. She had failed all treatment for osteoporosis, and she was actually involved in a study and getting a chemotherapy shot once a year. Now, what happened with her is she would sneeze and she would fracture her ribs. And so I remember the agent calling me and he's trying to plead his case. And like, I just wish I had something that I could document so I could give her the long-term care writer. And he said, well, she's such a nice person. Does that count? Well, unfortunately, I wish it did, but it didn't. And we were not able to give her the long-term care writer. But when we're looking at osteoporosis, it can be preferred, right? If uncomplicated, no fractures, or up to table B to D from a life insurance risk. Morbidity, we can do preferred, no symptoms, involves 2 or less joints. Preferred to standard, symptom-free for the last 6 months, stable treatment, no steroids or narcotics, no joint replacement, and the decline. So this again helps set expectations with your client. So with joint replacements, treatment with multiple injections, severe, we're not able to issue. So we talked about comorbidity. So along with osteoporosis, someone may also have that sedentary lifestyle, rheumatoid arthritis, inflammatory bowel disease, celiac disease, right? And excessive alcohol use too. Now the morbidity concerns. So why are we so concerned? Well, falls, mobility, right? Progressive disease, going to other joints, requiring joint replacements, and then completing physical therapy if the joint is replaced. So that's the key. Always complete physical therapy. Rheumatoid arthritis. So interesting thing with rheumatoid arthritis, there are not a lot of doctors out there practicing, not a lot of practicing rheumatologists. And did you know that rheumatoid arthritis, someone can go on average 5 years with symptoms before being diagnosed. So that's the challenge with rheumatoid arthritis, getting someone in to see a rheumatologist and diagnose as early as possible to start treatment. It is chronic. You never get rid of it, and it causes inflammation in your joints. Very, very painful. From a mortality risk, it can be standard all the way to table F as in Frank if you're taking steroids. Steroids are very hard on the body and they can decrease your lifespan. Now, from a morbidity assessment, preferred or standard, minimal to mild, but a decline if moderate to severe for the long-term care writer. So we look for the treatment, right? We don't like the immunosuppressive drugs or steroids or joint replacements. And then juvenile rheumatoid arthritis would also be a decline for the long-term care. Now, other comorbidity concerns, you may look at that and say, coronary artery disease, we're just now really looking at the tip of the iceberg on inflammation. So inflammation and how it affects rheumatoid arthritis as well as coronary artery disease. And then morbidity concerns, mobility, right, and ability to form your ADLs with joint deformities. Joint replacements. All right, so we have really relaxed this a bit. I'm anxious to see where we're going to go here. I can tell you a little secret. It's really hard to go out on claim for a knee replacement, because with knee replacements, if you go through physical therapy, you're through that 90-day waiting period. Shoulder replacements, not so much. Shoulder replacements, that's going to be a longer waiting period. Because think about that. If I have my shoulder replaced, I can't lift my arm above my head. So there's your two ADLs, showering and dressing. And what's really important to look at when underwriting joint replacements is, was there any post-op infection? And my boyfriend's a family practice physician. He sees a lot of people after their joint replacements where they go back to the surgeon says you're fine, and then he finds out that they actually have an infection. So a post-op infection is a very real thing after the joint replacements. The biggest money makers for hospital systems now, your colonoscopies, mammograms, and the orthopedic surgery. So of course we're seeing more of them too. And you see people more active right after the joint replacements. And then cancer. So with cancer, you may say, why is that such an issue, right? You should be more afraid of somebody dying than going out on long-term care. Well, more people are surviving cancer. I've seen people survive 3 primary instances of cancer. So what we look for is, how bad was the cancer at diagnoses, what type of cancer it was. So it's all about how are they through, that period where it could recur. So these are some of the timelines there. And what I will tell you, I'll give breast cancer as an example. This is a real life claim. We saw this case. She was healthy. And then 3 years into the policy, unfortunately, she was diagnosed with breast cancer. Now, she had the long-term care writer. So you may say, how can you have breast cancer and go out on long-term care? Here's what happens. So with the surgery, if the surgeon has to cut the lymph nodes underneath the arm, so your armpit, what happens is there's an increased risk of having swelling or edema underneath there. So, and this is what happened to our member. She had the edema, so she could not lift her arm above her head. So she couldn't lift her arm above her head. So what 2 ADLs couldn't she do? Dressing and showering. And she went out on long-term care claim. Now we're delighted at Nationwide, right? Because that policy functioned just as was supposed to. And we were able to provide benefits for her while she was going through this terrible time with being diagnosed with breast cancer. And these are some of the complications. So in the next slide here, we could talk about, melanoma, right? That's we're seeing a lot more of that, right, with the sun exposure. But the thing is with melanoma, people are surviving it. Now, prostate cancer, as you know, we see a lot of people living with and not dying of prostate cancer. So you may say, well, how can you go out on claim with prostate cancer? Well, here's how it could happen. So let's say you have prostate cancer, you go through a prostatectomy or radiation, and there's a recurrence of it. So when there's a recurrence of prostate cancer, it usually recurs in the bones. So when it recurs in the bones, then you're going to start having problems, right, with mobility and, problems with chronic pain. So prostate cancer usually follows prostate to bones and then to other areas like the lung or the liver there, unfortunately. So that is the end of our presentation for today. And I know we'd like to open it up to any questions.
Yeah, thank you, Kathy. That was a lot of great information. I appreciate it. Just one question so far. With all of the major changes Nationwide's made recently, where do you see the underwriting process going in another year or 3 years or 5 years? Where's this evolution going to go?
Yes. So we are in that transition period right now with the old way of underwriting versus the new way with the digital underwriting. So where I see this is getting rid of age and face amount requirement charts and doing more of that individualized underwriting. And we're really starting to do that. Our success story was an example of that, where we didn't follow our age and face amount requirements. We are always inundated as carriers with new tools coming out from vendors. Are always trying to sell us on the latest and greatest. I do see paramed exams going away. I do see insurance labs going away, as well as resting EKGs. And why I say that, I kind of been a kind of a outspoken person on this for years. Our paramed exam companies have not kept up on technology. It took them such a long time just to be able to type in the exams, right? And I think now they're feeling that, and they're trying to then buy companies, right, develop different tools because they're switching to the digital underwriting. I'm so happy the resting EKGs are going away. That's been a huge win for our industry. But I would say less invasive requirements, more human interaction, relationships between the underwriters, right, with the financial professional or BGAs becoming extremely important, in service becoming very important.
Awesome. Thank you very much. That is the only question I had. Um, so I think we're going to call it. I want to say thank you to Charlene and Kathy, as well as everyone that joined. If anyone does have any more questions, please call our office. Our phone number is on the screen. My email address is on there as well, 800-228-0008. Any other questions you can come up with, cases you want to review, anything you can think of. Um, so again, thank you, Charlene and Kathy, and I hope everyone enjoys the rest of your day.
Thanks, Sean.
Thank you,
Thank
guys.
you.